Hello, friends. It's October 10th on the calendar, and we're starting our weekly review of financial instruments. Today will be a bit more interesting. We've got a little more volatility, and there are some trades here and there. I mentioned this in the last review. It's Texas Instruments Incorporated. So here. Well, I mentioned that I shorted actually. Here's the position, the stop. Visually, do you like this kind of thing, by the way, or not? And the volume and all that. And here's the realized profit as of now. By the way, I took this screenshot before the review, so it might already be higher now. So, I'm leaving the position here, planning to hold it to 160, somewhere in this range. I haven't set a target yet, but I will need to. Booking. So I also carefully drew this detailed illustration for you as well. An ugly head and shoulders pattern here. I marked it like this. So here it is. Here's the pattern, and this was the reason for entering. Here's the entry point. And here's the stop. It's already below the entry point, so there's really no need to worry too much. The purchase was at 4,882, and I want to hold it up to here. Well, that's just based on the pattern, right? Plus, this will be a support level. There's a trend line here. And from here, we'll most likely bounce. If we zoom out, we'll see that a certain number of participants will definitely start closing their shorts here, myself included. This zone right here is a super support zone, so with high probability we might dip a bit lower, but I never dreamed of making all the money, so there's no need to be greedy. There are a ton of instruments on the American market that you can get into. Now, I'm not showing you Broadcom because that's my personal story, so I don't recommend getting involved there. I'm just sitting and waiting for the gap to close again. Well, actually, not a service. I mean engine. That's another short I took. I haven't talked about it before, but here the position is more or less at break even. I entered somewhere around here, maybe with a small profit. You can probably ignore this one too, I think. Chevron, I mentioned this in the last review. Look at how well everything is developing here too. It's not such a big position. If booking has about $5,000, then here it's a bit less with a slightly lower stop and a smaller profit, about $100. So basically, this is a screenshot of three positions: booking, Tex, and North. Here, Alet is also set around the 140 mark, in the area of 140. As for new trades, the American market is starting to open up. Among the new trades, I have a position in T-Mobile. It's currently in the red, and the position is very small. The arrow should be somewhere around here. This is where I entered. Very convenient. So this is my entry point, and since the stop is very far away, the position is very small. Everything is in line with risk management. I recommend you do the same, by the way. Regarding booking, I re-entered there. See the arrows where there was a short and a long, if you noticed. Here it is, long, short. The stop was hit, and I switched, so that's actually where Bitcoin was. Well, it's another false breakout, friends. What else can I say here? It's not like I have anything to brag about, because on Friday I analyzed and said that we saw this candle, and the probability of updating the highs was higher, but whether the breakout would be false or not, we had to wait and see. For now it looks like a false breakout. We reversed, and my bot is set up to short from this position as well. And it's only giving me a loss of about 40 bucks or so, because it keeps shorting and closing each position, shorting and closing, making profits along the way. And right now, it's pretty much the same as with the euro dollar. Just as wild. The divergence that's been going on since the end of 2024, it's almost a year now, of course. Soon all of this is divergence. What that means is that we keep hitting new highs one after another as if, well, that's a utopia too. Sooner or later, that's 100. I was forecasting, for starters, 100, maybe 95, I don't know, 75. Still, based on my experience, I think divergence should resolve at the minimum. Any divergence that forms should resolve at the minimum of that divergence. Where was our minimum? That's the target. So the target is 75, but for now, we're talking about the reality of updating the minimum. Why in reality? Because any minimum is a liquidity zone, and usually there's a strong reversal from it. That's all there is to it. Oil. Once again, the volumes from below are great. The downward movement, in my opinion, is over, but such a daily candle, a very significant daily candle. If it doesn't get bought back somehow, it's currently at -4%, the current quote. But we could see further acceleration next week. Again, I'm not considering shorts because I don't have any technical reasons for that. If the lows get updated, I'll be watching the volumes and so on. In general, for now, I'm out of oil positions, which I can't say about gas. As I told you in the last review, I shorted gas right here because it's a classic reversal pattern. And on the next candle, Monday, I got closed out. I entered again at about the same levels yesterday, so I'm short again for now. And the short is doing pretty well. The nearest support is here, somewhere in the 3.3 range at the high of this consolidation, but that's the maximum. And actually, according to the volume profile, which I added again, it's 3.2 here. Right here, somewhere in this area. If you highlight it, well, you could probably mark it like this. This is the zone where if you have shorts, you can cover them. That's exactly what I plan to do. Let's move on. There's one position open. Silver. Look at the volumes that showed up yesterday. This is already very interesting. Interesting in terms of the setup. I tightened the minimum of today. If we update it today, I'll go short on silver and gold right away, as soon as possible, to catch pullbacks from this move. For now, I'm not predicting any reversals or anything like that, but at the very least, you can look for speculative pullbacks from such a strong move, and I think you should. As for the dollar, great profit this week. You know, I'm in shorts, I moved my stop, the stop didn't get hit, so overall it's great. I moved the stop even lower, by the way. Here, profiles have appeared, yes, that could also be interesting. 1.14 is the nearest strong profile, and now there's this kind of stair-step profile, which will act as resistance as the price rises up to 1.1737. That's about it. In my opinion, regarding the euro-dollar, you know, I said there's a massive divergence here, which looks like this. Just like on Bitcoin, by the way. It's clear, right? The price is rising, but the main, most interesting indicator isn't rising. So a reversal candle, increased volume, and a shock. Everything was done as it should be. So then I just move the stop here, then here, and keep trailing the stop. So the second position is open. I currently have two shorts, gas and euro-dollar. DXY, my friends, could form a double bottom. I set an alert at 99.8. That would be very interesting, especially if today's session gets bought up and we close above. This consolidation here is really solid. Well, the profile is still an interesting thing, yeah. Here we see that resistance has been hit. And well, the support is here. This consolidation will serve as support in any case. Further down, there's this profile, and then another, even stronger one. Well, I had already marked this red line even without the profile. You can see the band here. It was highlighted in previous reviews as well, so it's clear to me anyway. But with the profile, it's probably more visual and interesting for you. So look, here's what could happen. There could be an interesting double bottom forming here. What do you think? I think it could be like that. So my forecast would look something like this. That is, after breaking the high, there's usually a retest. Here, in this particular case, we could potentially go down somewhere, perhaps test the established profile. We could even conceivably go down to the very middle, but there just aren't any significant supports present here. So I'm much more strongly inclined to think that if we decisively break the current high, we absolutely shouldn't, in theoretical terms, go below the 99 mark. Well, and accordingly, if something quite similar to this precisely forms here, as for DXY, what could the euro-dollar draw? My forecast for the euro dollar, once again, is up here to 1.11, but we won't get there without pullbacks. 1.14, but 1.13 at 65, I just won't. 1.13565, so there will be a spike here and then only execution. There's no double bottom here. Oh, double top. This isn't a double top. The close is above. So in general, no, this isn't it. For DXY, yes, there's a classic double top with a renewal of the lows, but only with a wick, not with a solid candle close above the high. Here we don't use this pattern. I'm not taking it into account for now. So in principle, everything matches up. We'll see how it all looks, but a correction is absolutely necessary. Look, but plan A is that we still need to go below 1.14, maybe even 1.11. Maybe it won't happen. Yes, we'll see, but it's highly likely that we need to go after this liquidity. I plan to hold my shorts until then, especially since I've already moved them to break even. So moving on, let's take a closer look at precisely how the major American stock market indices are performing today. We observe a rather noticeable red candle with a new high being established, but so far the overall trading volumes here are unfortunately rather disappointing indeed. For now, I don't think there's any reason to start sounding the alarm, but it's an interesting week. By the way, similar weeks have closed like this before. But the week is clearly shaping up to be a reversal so far. If it consolidates, what do I mean by consolidates? If the distance between the candle's low and the close is minimal, ideally, if they're the same value for the week, then you could try a light short on the Nasdaq and S&P. Why light? Because it's just one basis for it. There's a breakout from the channel, yes, but we've seen breakouts from the channel many times, and then it reverses. That's why you need to watch the daily close. But overall, these are already some signals, I would say. Let me remind you that the S&P also has a very strong divergence, and it's just a matter of time before it all comes back. So this is almost a 99.5% shock. It's just a question of when. I don't enter just because of a divergence. I look for reversal patterns, intraday volumes, various formations, and so on, like breakouts from channels, resistance at the highs, as we see now on the S&P. It's a great spot for a reversal. But that's not enough. Even if we drop below this low right away, say on Monday, there's a high probability we'll see a pullback to somewhere near the upper boundary, and then that's where you could short right here. So I think there's no need to rush into shorts. I know that those who rush into shorts don't stay in them for long, so I'm convinced that stop losses are a real lifesaver in this case. It's like, for example, sitting in gold shorts while it's rising without any breaks. So in general, the S&P is getting interesting to watch. Maybe soon, maybe. I have 3 shorts that I've mentioned before. A bit more on the American market, which I'll show you today. Even in a rising American market, you can still find, with great pleasure, stocks that are worth shorting. That's what makes the American market so valuable and fascinating. And likewise, when the market is falling, you can find stocks that are going up. By using technical analysis, volume analysis, and all that, that's it from me. Take care of yourselves, have a great mood, and enjoy your weekend. Bye.